Happy New Year, everyone, and welcome to 2025. If you thought the complexity of the GTA real estate market was already high, well, guess what? We're about to add another layer of complexity that we have to account for as we try to navigate this market to understand where it's headed and what will happen. The complexity is going to come through the form of politics because, as we all know, we're going to have a big, potentially drastic change in policy and where this country is going to be headed, and at least the policies that are going to come along with that. And because of that, personally, I felt like I wanted to zoom out, take a look at the last 50 years, look at median house prices, and then look at the governments that were in position of power during that time period, just to see whether or not different governments had a bigger or a lesser impact on housing. So with that, let's get into it. I promise I'm not going to spend too much time on it, and we're going to get into the stats that I typically cover. But it is important to kind of talk about this right now at the beginning of the year because it's coming down the pipe and it will impact us sooner than later. Now, it's no secret that the current government has probably seen the highest increase in prices in Canadian history, as you can see by this chart right here. And here's our science project where we've overlaid the government affiliation at the federal level during the last 50 years to kind of understand, see if we can trend out price appreciation in Toronto specifically. And what we're seeing from this graph over the last 50 years is that prices in the city of Toronto have appreciated more during a liberal federal government than when there was a conservative federal government. So to keep that in mind, as 2025, we're likely going to see a switch to a conservative government. So in theory, we should be expecting lower price appreciation and maybe a housing market that is not as dynamic or as crazy as it was for the last 10 years. Now, spoiler alert, 2023 and 2024 were some of the worst years on record, at least in the last 2 decades, mostly based on price appreciation, which there was none of available. I mean, depending on asset class, property type, where, but let's just call it at large, the market was flat. And then on top of that, we had some of the lowest activity on record, meaning we were selling way less homes than we typically do. And that is because we have less buyers, or at least the buyer pool is much smaller than it used to be. Now, I have my thesis on that. And one of the major factors that I believe in personally, at least this is based on my opinion, is that the reason activity is low is because we have basically priced out younger buyers. The move-up buyer, the one that has a condo downtown, maybe a 1-bedroom or a 1+ den, they cannot afford to move up to a townhouse or to grow their family, move into the suburbs, get a bigger house, because condos downtown have taken such a beating. So for example, in 2019, 2020, call it, the spread between your median or average price of a condo downtown was, let's call it $600,000, and a detached home was $1 million. So that spread was $400,000. They would have to take on another $400,000 of additional mortgage to make the move, but they could upsize. That spread has grown dramatically during COVID. It really went through the roof as we reached the peak in 2022 and condos stayed relatively flat. But even after the quote unquote correction after February of 2022, the spread is still so high where moving out of your condo, it's just not worth it. First of all, you're going to be taking on $500,000, $600,000 more in mortgage to get what? So you're basically having a bunch of people who are stuck in their condos and they cannot sell them. And that market is super slow. And there's a bunch of reasons for that. But that market being super slow, you've alienated a ton of end users who would be going out there and buying these townhouses at, $800,000-$900,000 or those detached homes at $1.1-$1.2 million. So that is basically the trickle down effect of what's happening with people that simply cannot afford to move. And this is why we're seeing a stagnation, or basically everything kind of being stuck. Now, whether or not this is going to change, I don't know, but I just felt like I would highlight this because it's an important thing that is happening. It's a phenomenon that's been playing out for a while now, and the spread continues to be high. So the only way it gets fixed is either condos have to go up or detached homes have to come down so that the spread makes sense. Move-up buyers can actually afford to sell their condos at the current prices and get into a detached home. And here's how we ended the year. I would call this pretty much a flat year with appreciation for the GTA at large being 2.4%, whereas typically based on 16 years of data, we're usually closer to 9%. So again, we saw this coming. In 23, I said 23 is going to be a flat year, and 24 had pretty much the writing on the wall. It's going to be another flat year. And what's happening for 25? I mean, I see pretty much more of the same. In fact, I see some additional pressure actually going to 2025, but we're going to get to that in a second. What's interesting is at least the market is still moving up seasonally. So going up and down seasonally. For the last 2 years, the spring market has been the stronger market if you're looking to sell. And if you're looking to purchase, usually the summer and the winter months like right now are pretty much the best times where nothing's really happening. Properties are sitting, although I have seen an uptick in activity in the last 60 days that is beyond normal expectations considering how slow everything has been. But now what I thought I would do for this month's review is I wanted to overlay 2024 activity, which is this black line, and then 2023, which was another flat year where we ended it with about 2% of appreciation relative to the 9% we usually see. So as you will see, 2023 started off really with a huge bang, and then off it came down, had a weak fall market, and then everything was slow. And then 2024, much of the same, but we didn't see the craziness of 2023, or at least the spring season of 2023. And then we had a very slow summer market and, a little bit of a fall market that worked out decently, at least for my clients. And then things are coming right back down. Again, this is the market at large. If you look at, detached in Richmond Hill versus a condo downtown versus a townhouse in Mississauga, it's going to be a little bit different. They all behave a little bit different, but generally this is the consensus of what you should expect. This is where the issue of lack of activity, lack of transactions starts rearing its ugly head. So for example, if you look at the green line, typically we will sell 10,000 homes in the month of May. We sold 7,000. In the month of August, or let's say even September, we're supposed to sell 7,600. We sold 5,000. This is a massive discrepancy in terms of liquidity. So if you think about it, we're selling 30% less homes than we typically do in a massive market like this. That is a big change. Surprisingly, at least the part I'm surprised about the most is this is 2 years in a row that this is happening and prices have only remained flat. I would have expected prices to actually go down, but they have gone down in certain asset classes like condos, especially downtown, but they have remained relatively resilient and flat in most of the GTA. What we noticed is we had a mega cut in rates, another 50 basis point cut right here in October, and that kind of moved the market a little bit. So as you will see, it spiked up activity pretty well into October, even into November. So we're usually seeing 8,000 sales in the month of October. We saw 6,600. That is a much smaller spread than the spread we saw here where we sold significantly less. And we were much closer to the trend line in November, even in December as we wrapped up the year. Now that is a positive trend. And if that continues into 2025, that is going to be great. But again, I am not overly confident at this point in time that that's going to continue. Maybe it will, maybe it won't. I got to tell you anecdotally, I have seen a lot of properties start to sell conditional in the last 30 to 60 days that were not moving for months, which is pretty interesting. And that's a combination of sellers basically, becoming realistic and, giving up a lot of price. And then you have an influx of buyers that are coming in because they feel, well, maybe the market's bottoming out in certain respects, right? That's a combination of things happening. In terms of trends that are concerning for me for 2025, while activity has gone up and will have better absorption and things are selling a little bit more than they used to, the bigger issue here for me personally is that we have 50% more active inventory for sale in the month of December. So typically we would have maybe 10,000 active listings in the month of December as things usually slow down. We are right now at 15,000 active listings and it's been 8 days right now into January and active listings are picking up. And this is the concern I have, is that while activity and there are a few more buyers, the listings out there are pretty significant. So this could mean two things. Either we're going to see some absorption and maybe there's going to be some quote unquote FOMO or fear of missing out, or we're just going to see listings continue to pile up and maybe we're going to have a very slow spring market because there's just a lot of active inventory. So unless sellers start capitulating and giving up, deals, we're still going to remain in this illiquid state where nobody's doing anything because the move-up buyers can't afford to leave or sell their condo cheap, and the only way they can buy your house is if you give them a deal on your house because they're selling their condo cheap. This is kind of like what we're dealing with right now, and I'm seeing it even on listings that I have and then clients I have that are trying to unload condos. First 60 days of 2025 will be very telling. As of right now, I am not very confident. I was hoping that 2025 is going to be more liquid with more activity. I thought 23 and 24 were kind of like the 2 years that make or break it, but it looks like this might actually continue on into 2025. Now, I gotta say, it's not all doom and gloom. Obviously, real estate is just one piece of it, but I do feel that people in general are feeling more optimistic about 2025 and in terms of where the country is headed, at least based on promises that have been made by politicians. Now, my piece of advice is don't listen to politicians because nothing they're going to say is actually going to come true. Maybe they're directionally going to steer the ship in a different direction, but most of the things are not going to happen, right? So take everything they say with a grain of salt, and I will see you in the next video.